Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. Today's high income yielding stock, Westlake Chemical Partners LP, traded on New York Stock Exchange under symbol WLKP, continues to be a great company that seems to fly under the radar of Wall Street, or at least doesn't get discussed as a lot of other ultra high yield dividend stocks. Which is odd, really. It's been reporting strong financial results, including quarter-over-quarter income, adjusted earnings, and cash flow growth. It has recently declared its 37th consecutive quarterly dividend. While Westlake Chemical Partners stock is up around 1% in 2023 at around $21.50 per share, conservative Wall Street sees sunnier days ahead, with analysts providing a 12-month share price median forecast of $23 per share and high estimates of $26 per share. John?
Thanks, Mo. Westlake Chemical Partners LP is a limited partnership formed by Westlake Chemical Corporation to operate, acquire, and develop ethylene production facilities. The company's business and operations are conducted through Westlake Chemical OpCo LP, which is a partnership between Westlake Chemicals Corporation and Westlake Chemical Partners. Westlake owns a 22.8% interest in OpCo LP. Its assets include 3 ethylene production facilities in Calvert City, Kentucky, and Lake Charles, Louisiana. Here, the company converts ethane into ethylene with an annual capacity of approximately 3.4 billion pounds, which it ships along the 200-mile ethylene pipeline.
I think before we go into any details, it's important we talk a little bit about what is ethylene and what is it used for.
Yeah, that's a good question. Ethylene is often called the world's most important chemical and is a leading indicator of growth in the manufacturing sector. It's the building block basically in plastic. Ethylene is developed into 4 different compounds, which are turned into numerous household and other products. Now, these include food packaging, bottles, polyesters, antifreeze for airplane engines and wings, vinyl products used in pipes, sidings, medical devices, and the kind of synthetic rubbers that you find in tires and foam insulation. Now, because of this, the company's products are always in demand. It has a protective provision in its sales agreements with Westlake that provides a fixed margin of 95% on its products.
I touched on this a little bit earlier as well. This company reported quarter-over-quarter income, EBITDA, and cash flow growth. If you could elaborate a little bit more on this, John?
Yeah, for the third quarter of 2023, which was ended September 30th, Westlake Chemical Partners announced that net income slipped 10% year over year to $13.2 million or 37 cents per unit. But on a sequential basis, Westlake's third quarter net income was up 11%. Cash flow from operating activities was down 12.5% year over year at around $101 million, but was up 2.4% over the $98.5 million recorded in the second quarter of 2023. Distributable cash flow was $13.6 million, down from $16.7 million in the same period last year, and down slightly from $15 million in the second quarter of 2023. The decrease was primarily due to higher maintenance capital expenditures, which are weighted towards the second half of the year.
It just announced its 37th consecutive dividend.
Yeah, in late October, the partnership announced a third quarter distribution of 0.4714 per unit, or $1.89 on an annual basis. Now that works out to a yield of 8.83%, which is almost triple the current inflation rate of 3.2%. Now, if you look at the company's chart, you can see that Westlake has a history of raising its dividend every quarter since going public in late 2014. In fact, prior to the 2020 health crisis, it had its payout for 21 straight quarters. Now, in the last quarter of 2014, it paid out 0.1704 per unit. And by the first quarter of 2020, the quarterly distribution had soared 176%, 0.4714 per unit. Back then, the 2020 health crisis hit. The fallout wasn't really all that bad, though. Westlake still paid a dividend. It just hasn't raised it since then. It's held it at, as I said, 0.4714 since then. Now, one reason it's been able to maintain its juicy payout is due to its stable and predictable cash flows that come from 95% of its production at a fixed margin. Now, this insulates the partnership from commodity price risk to its investment-grade parent, which provides it flexibility in uncertain economic environments. And once the economic outlook becomes more certain, chances are good that Westlake will resume hiking its quarterly distribution.
And this will also hopefully help juice Westlake Partners units too.
Yeah, Westlake Chemical Partners units have traded range-bound for the most part since April 2021. As of this recording, Westlake Chemical Partners units are up around 7% over the last 6 months, 0.5 percentage point year to date, and 3.5% year over year. Not exactly earth-shattering moves, but investors have been able to weather the lackluster growth with a reliable ultra-high yield dividend. Moreover, the outlook for WLKP units remains pretty robust.
John, thank you so much for your insights. Just to recap, Westlake Chemical Partner LP is a leader in lucrative niche industry. Thanks to the long-term strength of its market position and the protected provisions of its sales agreement, Westlake is able to report stable fee-based cash flow. And this company uses that cash to provide shareholders with a reliable ultra-high yield dividend. 37 consecutive quarters and counting. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.